Hi everyone, Brad Walczak with you from Premier. First off, I want to thank you all for joining our webinar today. I know how hard it is to get away from the busy schedules and your clients, so again, I appreciate it. So today, with all the changes that have been going on in the short-term home healthcare market over the last year, one of the products that we can always lean on is Home Care Secure. Second to, I guess, the underwriting, and it's one of our lowest issue ages at 35. So with that, I have Liz and Nick with us today to go over the product and answer any questions you have. During the broadcast, I will try to field some of these questions. If I either don't know the answer or if I can't get to them, we'll take some time at the end to do it. So with that said, I'll let Liz take it over.
Excellent, thank you. Well, greetings and many thanks for the warm introductions here. As Brad had mentioned, my name is Liz Christopher. I'm joined today by my colleagues Nick Polish and Tierney Beauregard. And we're thrilled to be with you to introduce an innovative solution which combines insurance with navigation and advocacy resources. Now, we often like to tease that you don't always associate insurance with innovation, but after today's presentation, we hope you come away with just that, a different way to think about insurance and a robust offering to enable your clients to realize their dream of aging at home as safely, as independently, and as long as possible. Now, before we get into the product details, I did want to provide just a little bit of background and context on why we designed this solution offering. So all of our employees have either been a caregiver or have had to search for caregiver services for a family member or a loved one, as I'm sure many of you and many of your clients have had to do as well. We know that the majority of people want to age at home now more so than ever, yet the emotional and the financial burdens can be overwhelming, not only to the individual themselves, but also to their families. In addition, I think we can all attest to the fact that the short-term and long-term care space is very disjointed and fragmented. And if you couple all of this with the misunderstandings and misperceptions of what Medicare will cover, it's no wonder that there's a problem. In fact, the average person will consume roughly $50,000 in unreimbursed custodial healthcare expenditures in their lifetime, most of which is not budgeted or planned for. It's a massive blind spot for so many, and one which results not only in having to make difficult decisions for where a loved one ages, but also to the quality, to the access, and even to the type of care that they may receive. And on a very somber note, these expenditures are the primary reason that individuals file for bankruptcy late in life. And that's what brings us today to Home Care Secure, which is our integrated solution that combines an indemnity insurance product with navigational and advocacy supports to provide your clients with the tools, the resources, and the financial security to age at home. Now, at a very high level, the indemnity insurance product has available lifetime maximums ranging from $20,000 to $60,000 in $10,000 increments. The benefit's designed to pay over 50 weeks, thus leading to weekly payments ranging from about $400 to about $1,200. And because of the indemnity nature of the product, this money is paid directly to your client. Now, if we move over to the right-hand side, you will see the Aging at Home Association. And this provides a robust set of tools, resources, and discounts that we divided into kind of three main areas. The first being discounts and special values for frequently used goods and services. So think telemedicine and durable medical equipment. Secondly, we offer care coordination services. And now these can range from free online self-service tools all the way up to discounted and personalized care that's provided by a dedicated advocate who's trained in elder care. And then finally, we also offer an annual well-being assessment that we developed in partnership with Fidelity Investments and the Stanford Center for Longevity. And that takes a holistic view of an individual in the areas of life, health, and money. So all of these elements work together to educate your clients on the emotional, the social, the financial, and the operational components to be able to age at home. And with that, I'll turn it over to Nick to dig into some of the product details.
Great, thanks, Liz, and good afternoon, everyone. So I'm going to spend a couple of minutes on this slide addressing three fundamental questions. Who's eligible for coverage? What are the key product features? And how do my clients qualify for the cash payments? So let's work our way left to right. So first, from an eligibility requirements perspective, there are three. First, your client must be entry age 35 through 84. Secondly, be a resident in one of the 22 states where Home Care Secure is currently available. And we'll take a look at a map in a few moments. And then finally, be able to pass the 5-question simplified underwriting process. So passing is the ability to be able to answer no to each of the five health eligibility questions. And note that there are no behind the scenes RX or MIB check, nor is there a bill chart. And based on results to date, more than 90% or more of your clients will be able to say no to each of the 5 health eligibility questions. Now, focusing on the middle column now, key product features. Similar to other products in this category, Home Care Secure utilizes entry age pricing and is guaranteed renewable. So entry age means the monthly cost is based on your client's age at policy issue, and the guaranteed renewable component means premiums are fixed for the life of the policy unless there is a class rate change at some point in the future. As Liz previously mentioned, plan maximums range from $20,000 to $60,000 in $10,000 increments. And in order to allow the policy to keep pace with wage inflation, there are 2 mutually exclusive options available to your clients. One is the inflation protection rider, and the second is the $10,000 buyout. So let me review the key components of each. First, the inflation protection rider. So this decision to purchase it is made at policy issue. The interest rate is 3% simple, and it begins to accrue in the 7th policy year. And there's no limit to the increase in the lifetime maximum while the policy is in force. So for example, if your client purchased a $50,000 policy with the inflation protection rider, after 30 years, that maximum will have grown from $50,000 to $86,000. Now, the alternative to the inflation protection rider is the $10,000 buyout. The buyout is available every 3 years or more. However, it is subject to a lifetime maximum benefit of $60,000. So to continue with the inflation rider example, if your client purchased a $50,000 lifetime maximum benefit, they would only be able to buy up one time because they'll then hit that $60,000 maximum. And then, of course, someone who purchases a $60,000 lifetime maximum benefit would not be able to buy up at all. So for them, the inflation protection rider would be the preferred approach. Additionally, the $10,000 buyout is subject to the same 5 health eligibility questions, and prospective rates will be based on your client's age at buyout, along with the new lifetime maximum benefit. Now, the lifetime maximum benefit does grade over a 5-year period. It starts with 10% in year 1, grows to 20% in year 2, and then becomes 100% in the 6th and subsequent policy years. So what was the rationale behind offering this feature? First, it allowed for simplified underwriting and more competitive rates. And secondly, when you think about it, while we can't predict our healthcare future, your clients are purchasing these type of policies 5 to 10 years or more before they anticipate needing the cash payments, in which case the grading schedule is effectively not applicable. The final feature I'd like to share with you is the multi-episode of care. And the headline here is that Home Care Secure can be used episodically over a period of time for acute healthcare conditions. And one episode of care ends and a second begins when your client recovers and does not need home health care services for a minimum of just 30 days. Now I'm going to focus on the right-hand side, the last column, claim qualification requirements. So there are 3. So first, a licensed healthcare provider, which can be a physician, but can also be a registered nurse or licensed social worker. So one of those healthcare professionals must certify that your client suffers from either a physical or cognitive impairment. Physical impairment is the inability to perform 2 or more of the activities of daily living, such as bathing, dressing, eating. A cognitive impairment would be, for example, a dementia diagnosis or someone who suffered traumatic brain injury. The second requirement is that your client needs home healthcare services at least 3 times per week, and each home healthcare visit is at least 1 hour in duration. And the final requirement is that all of this is documented in a plan of care. Now, as Liz mentioned earlier, because of the indemnity nature of the benefit, the weekly cash payments are made directly to your client, and they can use the money as they wish without any restrictions. Just reinforcing, well, maybe not reinforcing, but sharing where the product is available. The 22 states in green are where Home Care Secure is available today. The states in gray with their abbreviations are targeted for introduction in the second half of this year, and then those that are just gray are into 2025 and beyond. Let's take a look at the application and enrollment process. So the process is simple, yields real-time underwriting decisions at the point of application. So these are the knockout questions themselves, and note that the look-back period is only 12 months and health questions are very narrowly defined. And as I mentioned earlier, 90% or more of your clients will be able to pass this simplified underwriting process. So with that, let me turn it back over to Liz to discuss the features, benefits, and discounts available through the Aging at Home Association.
Great, thanks, Nick. So as we've highlighted, we were very purposeful in the design of both the insurance product as well as the association. Since we've been in this position ourselves, again, either as a caregiver or having to search for caregiver services, we know how overwhelming the process can be. And with our experience in the insurance industry, we've seen far too often that people just don't understand their insurance, right? They don't know their benefits or their levels of coverage, and they don't start to look into it until they're sick and at their most vulnerable. Thus, they're not usually equipped to make the best decisions. Therefore, we wanted to bring together the tools, the resources, and the navigational supports to help individuals and their families in advance of their time of need so they have increased peace of mind. And as part of this peace of mind, we wanted to ensure that the association provides valuable benefits and discounts that align with our mission to enable individuals to age at home with confidence. And the beauty about these benefits and discounts is that they're available not only to the policyholder, but to their immediate family members as well. So just to give you a few examples of what we mean by these types of services, you can see on the screen here that we divided them into 3 distinct sections. I'm just going to give a highlight on a few of them so you understand kind of how far-reaching they are. So one of them is free unlimited telehealth services through our partner with Wellvia. So this can be unlimited telehealth visits, either with a primary care or specialist, both for the policyholder as well as their immediate family members with no limitation. Secondly, we also offer access to discounted care coordination services. So as I highlighted, these care coordination services can range from free online self-service tools to help you make a plan to age in place, all the way up to discounted and personalized services that are provided by a dedicated advocate who's trained in elder care. And then the final category are like discounts and special values for frequently used goods and services, such as durable medical equipment or estate and will planning. And as part of that component, you can provide discounted access for people to help them create a will or create advanced care directives or put medical or financial proxies in place. It's really working with your client in advance so that they have the ability to document what their wishes and their desires are, and then making those wishes known to their families. So again, all of these elements work together to help educate your clients on all of the various aspects to enable them to age confidently. So with the insurance and with the association, you're probably thinking, all right, well, what does this mean? So we'd like to introduce you to Retiring Ray, who is a persona that we created to help bring all of these elements together and make them real for you. So Ray purchased a $50,000 policy with the inflation rider when he was 65 at a monthly premium of $109.57. Now I'm going to pause there for a moment because we were very particular about selecting that policy level as the example. Because if you recall a little bit earlier, I had mentioned that the average unreimbursed out-of-pocket custodial healthcare expenditures are $50,000. And that's an expense that 2/3 of us will have to encounter in our lifetime. Now we're going to fast forward a little bit, and unfortunately, at the age of 80, Ray requires in-home custodial care and he has to go on claim. So now if we move over to the right-hand side here, you'll see by this point, Ray has been making monthly payments for 15 years in the amount of about $19,700. But if you look, he has an available lifetime maximum benefit of $63,500, which reflects the initial $50,000 policy plus the inflation rider, translating into payments of $1,270 a week for 50 weeks. And since Ray has been a client for 15 years, he's been taking his annual well-being assessment, he's been leveraging the available tools and resources. Ray and his family know what to expect from a benefit perspective, and they have an aging at home place and plan. And now they're just executing on that plan with increased peace of mind. And with that, I'm going to turn it over to Nick to close us out.
Great, thanks, Liz. So this is the who and what slide. So who is buying home care secure? So typical buyer skews slightly female, 54% to 46%. The age range of our policyholders to date is literally the entry and the earliest and the latest entry ages, 35 on the low end and 84 on the high end. And our average to date, and the median is within in the same number, is 62 years old. Now, it's interesting when we look at the distribution of ages. 12% are between the ages of 35 and 49. 71% are age 50 to 69, and 17% are age 70 and above. And in terms of what they're buying, 70% of sales were either at the $50,000 or $60,000 lifetime maximum benefit levels, and 75% are purchasing the inflation protection option. And this aligns with the fact that most sold policies are at that $50,000 or $60,000 level, where the $10,000 buy-up is of limited or no value. So if we flip the slide, we'll talk a little bit about product sweet spots, and I'd like to highlight 4 dimensions where Home Care Secure kind of stands out from the competition, and these are in no particular order. So the first one is gender-specific rating. So this is a scenario where there could be a potential pricing arbitrage situation for you. Home Care Secure uses gender-specific rates, so male-female rates, while most other short-term products use unisex rates. And because women have longer life expectancies, short-term rates are higher for women than they are for men, which is the exact opposite of life insurance, which basically means that unisex rates for home health care insurance programs reflect the blending of higher female rates with lower male rates. And so you might find that for your male clients, Home Care Secure rates might be lower than the unisex rates and would represent a better value for your client. Second is the eligibility age, and specifically, between the ages of 35 and 49. Many short-term policies, initial entry age begin at age 50, and there's at least one where it begins at age 60. And Home Care Secure represents to you a broader addressable market because it opens up entry ages 35 to 39. And we just saw from the enrollment slide on the previous page that, in fact, 12% of our sales are in that 35 to 49-year-old age band. And that effectively gives you the opportunity to increase your short-term sales another 10 to 15%. The third sweet spot is this what I'm calling a two inflation protection options. So here's an opportunity to protect your clients from inflation-induced benefit erosion using a stacking approach. So as I mentioned earlier, Home Care Secure has a simple 3% inflation protection rider. And we always recommend the rider over the buy-up. Now, most short-term products that have a facility benefit, they have an inflation protection option for the facility benefit, but not for the optional home health care rider. So the idea here is to stack the facility benefit with insurance carrier A and their inflation protection option for the facility benefit. And you'd stack that along with a separate policy, which would be a Home Care Secure policy for the home health care coverage with its 3% simple inflation protection rider. And with this approach, your client has total benefit inflation protection for both the facility with insurance carrier A and the home health care services with, through Guaranteed Trust Life and Home Care Secure product. And then the final sweet spot are the benefits, services, and discounts through the Aging at Home Association. And Liz went over these in detail, so I won't belabor the point. But just to reinforce, the two most popular benefits are the free unlimited telehealth visits and the care planning and advocacy services through Wealthy. So let's talk a little bit about the opportunity. So why introduce your clients to Home Care Secure? So there's opportunities for your clients and for each of you. Each of you are trusted business advisors to your clients, and here's an opportunity to reinforce that position by educating them on a potential gap in their financial plan and introducing them to a solution to protect their future and provide them with peace of mind. We realize your time is your most precious resource. Thus, we designed Home Care Secure to be easy for your clients to understand. They just have to make two decisions at policy issue. It's affordable, with high acceptance rates, and it saves time with an efficient enrollment process, which takes literally 10 to 15 minutes to complete using Guaranteed Trust Life e-app application. In terms of resources and support, we're all laser focused on your success. We've developed a number of consumer approved marketing materials, such as explainer videos, product brochures, customizable postcards and infographics, and other marketing assets to assist your efforts. As well, as I mentioned earlier, we're fully leveraging their technology platform, including eApp, which is, again, their online quoting and enrollment tool, and GT Link, which is the agent portal. So in terms of what's next, if you're contracted with Premier and appointed with GTL, congratulations, you're ready to start selling Home Care Secure. On the other hand, if you're not appointed with GTL or contracted with Premier, please contact Brad or Katie, and they and their team will get you contracted and in market as quickly as possible. And on the screen are their contact information, direct telephone lines, as well as email addresses. So with that closes the prepared remarks that Liz and I had for you this afternoon. We very much thank you and appreciate your time. And I'll turn it over to Brad to see if there are any remaining questions that need to be addressed.
Great job, guys. No, really appreciate that. Couple questions, and I just want to clarify. So you kind of have the either options with the either inflation rider or the buy-up. Is that correct?
Yeah, yes, it's an either or. They're mutually exclusive. Okay. And you have to, like, if you want the inflation option, that's a decision you have to make at policy issue. If someone decides they didn't want to do it, then they always have that ability to apply for the buy-up in the future.
Okay. And they can't do the inflation in the future?
Cannot.
No. Okay. Considering
it's only a policy issue. Yeah.
Yeah. Okay. And then with that, so if you did the buy-up, does the premium for that base policy stay the same, and you're only paying the additional, I don't want to say attained age, or for that increase, or
no? You pay the combination of your new attained age and your new lifetime maximum benefit, which is basically the old one plus another $10,000.
Okay, now, so you would kind of get somewhat of a discount there, per se.
Well, you would get a, well, because so Home Care Secure ages are in 4-year or 5-year age bands. So if you bought a policy at, let's say, just for the sake of argument, at 35, and then at 38, you wanted to buy up, you're still the same age. So you wouldn't get an increase because of a change in age, attained age, but you would get an increase because you're increasing your maximum by $10,000.
Okay. Perfect. And then can you put up that state availability list again? So, and with that, you said just the grayed out area. So like New Mexico is a possibility, or that's not a possibility?
No, so the states that are in gray without their abbreviations are states that are not short-term home health care friendly states.
Okay. As I see California and Florida, that makes sense.
Yeah, and New York and well, New York's a different issue. Guarantee Trust Life doesn't do business in New York, but nor do a lot of other carriers for that matter, because of the regulatory environment. But yeah, it's largely the regulatory environment where states will not, the product will not be available in those states.
Okay, but you are, I mean, in the hopes of adding quite a few more. That looks pretty good.
Yes, I think basically, if you can get to 35 states, that's about the max in terms of states that are short-term home health care friendly states.
Yep, exactly. Okay, and then I don't know, just out of a curiosity question, real quick. The discounts on those digital companions. Is that something you're seeing more of? I know a couple of years ago, I think at the ITCLI or one of the main conferences had brought those up. It even had a little robot.
Yes, that's what our relationship is with LAQ.
Yes, perfect.
And we're seeing a lot of interest in those, especially as it relates to even helping individuals that may want to still be able to live on their own, right, and age independently, but it'll help them with reminders for, say, like medication management. It'll also help them combat social isolation. And those are the two primary ones where we're seeing that there has been the most interest and the greatest uptick. Is definitely for people, again, still being able to kind of retain that independence, but for their family members having that confidence, knowing that they're living on their own, but they do have some connectivity with them still.
Yes. No, that definitely have heard a lot of positive feedback on that. And then is it kind of a flat out discount? Do those kind of change, periodically, kind of, say even with Christmas coming up or anything like that? Or do we have a brochure for that? Is there anything that's listed in the brochure?
Yes, we can provide some sample information to you. The benefits that are offered through our affiliated partners remain consistent, so there's no seasonality or differences with them, and they are able to access them on their own. And we can share with you kind of a one-page sheet that outlines all of the opportunities that exist for people and the discounts that they have. The one thing that may change a little bit is that we're always looking to refresh the listing. So we don't oftentimes remove items, but what we like to do is really take a holistic look at an individual and maybe see where there are some opportunities to be able to help them. And so one of the ones, you can see pet supplies that are on here. One in particular that we've looked into, though, is for maybe individuals that are living on their own, and maybe they have a pet, but maybe they're starting to have some difficulty if they don't have a yard, or they say they live in an apartment. They're having some difficulty maybe walking their animal. So that is an example of one that we may look into partnering with a partner, right, that would be able to help provide maybe some discount pet walking or pet services for an individual. So we're always looking to expand our affiliated partner list, but the premise of anyone that we add on here really is that idea that they align with our mission to enable individuals to age independently and to age confidently. So that's how we kind of vet the individuals that we put on our list and then make available to our policyholders and their families.
Okay, no, that sounds great. And then I did have just one question here. I don't know if you can quickly kind of talk. What are the 5 knockout questions?
Oh, yeah, we could show you the slide with them.
Yeah, I think you had them on there. So
yeah, and the first one, I mean, you kind of look at this, and they're all kind of like gee whiz, no kidding, type scenarios. The first one is, it was in the last 12 months. Are you treated for any of those conditions? The next one is, do you use oxygen or opioids for chronic pain management? And then within the last 12 months, have you been, effectively using home healthcare services? Do you need assistance in performing the activities of daily living, or do you use any of those type of durable medical equipment to help you through the day, like a fork-prong cane, walker, motorized cart, etc.?
Yeah, no, that's perfect. No, thank you. And like I said, the underwriting is, I don't have a good term for it. I mean, it's actually, as long as you can walk and talk, you can almost get this. I don't want to say it's that easy, but it's definitely very liberal. No, that is all I had today. So no, once again, guys, I appreciate it. I appreciate you going over those questions. And look forward to the next time.
Absolutely. Thank you as well.
Thanks, everyone. Have a good day.
Take care, everyone. Enjoy.